world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. This week, we're joined by Philippe Gelis and Steve Lemon. Philippe is the co-founder and CEO of Kantox, a B2B FX company. Steve is the co-founder and VP of Corporate Development at CurrencyCloud, a wholesale FX and payments provider. We discuss a wide range of topics in today's conversation, including Monzo's recently published financial results, Banking Circle's $300 million sale to EQT, Airwallex's $80 million fundraise, and much more. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Philippe Gelis and Steve Lemon. Philippe and Steve, welcome to Rebank.
Thank you.
Thank you.
All right, so refresher for those who haven't listened to you guys the first time you were on, respectively, the podcast. Steve, CurrencyCloud, what do you guys do?
So we sell a payments engine to people like Philippe, actually. We're a utility rather than a service provider. So we sell to the industry, we sell to regulated entities looking to automate or outsource aspects of their cross-border payments business. Mm-hmm. So we work with companies like Stripe, Klarna, Travelex, Azimo, Kantox, Standard Bank South Africa, a wide range of companies.
Okay, so those guys kind of touch the end customer and push payments through to you guys to process?
Yes.
Philippe, Kantox?
So we go direct to the end customers, B2B only, size going from small companies to mid-cap companies with 1 billion, 2 billion revenue. So very focused on solutions more to manage FX flow, FX workflow, and FX risk. So really trying to help end businesses to manage better FX.
Mm-hmm. And if I recall correctly, it's like integrating into ERP systems and other systems they're already using, and then kind of putting some smart FX automation around it.
Yeah, so imagine businesses, e-commerce or anything like this with a lot of microtransaction in foreign currencies. What we do is we capture the data related to this microtransaction. For example, when they sell online, and we're able to fully automate anything related to FX. So the exchange, yes, but also anything related to managing the risk. So imagine you sell something and you have a payment coming in a couple of months. In real time, we capture that time. We're able to hedge the risk for this payment in a couple of months. So it's much more business oriented than really processing just the flow.
Mm-hmm. So one of the things I wanted to pick up with you guys, Monzo published their annual accounts, in their spirit of transparency, kind of sharing progress, and they posted for the year a £33 million loss. So they, I guess, over kind of during the course of this financial year, moved from the prepaid model to the current account model. So they effectively rolled out their deposit taking license and moved customers over to a fully functional current account. The prepaid card was always the customer acquisition tool, and then the question was how many of those prepaid card users they were going to be able to roll on to the actual current account. And it sounds like they had great success in doing that. I think they've got a decent percentage of those customers using their Monzo account as a main account and receiving salary in. I think all sorts of growth opportunities still in front of them, but they did post a large loss. So the question I have for you guys is, how do you build a complex business with a robust infrastructure without going bankrupt? You've both done it.
That's the $33 million question, isn't it?
So it's a lot bigger than basically all the money we have raised in 7 years. No, so but without joking, look, we started in 2011, 1 year after TransferWise, and I remember during a lot of time, people were saying, and people, it's investors, people from the industry, these guys are crazy, they are burning too much money, they will bankrupt, they will not make it. 7 years later, they have a significant size. I think there's something like 100 million revenue run rate, they are profitable. So in the end, founders and managers in a company have much more information than we have outsiders. So I think the people in Monzo are reasonably smart, the same as N26, Revolut. So all these people, even if they're losing big money now, I think they have a plan and they have more information than us, which doesn't mean that they will necessarily succeed. But I don't think it's necessarily bad if they really have a strong plan behind. So look, the future will tell us if they were right or wrong.
33 million is it's a scary number, right? And to the outsider, even as Philippe was saying, you know, we're not party to the numbers or their setup or their infrastructure, but there is a new paradigm. Fintech came on the scene, and it kind of coincided with a new paradigm in funding and building a business. The old way of building a business would be to grow your revenue line ahead of your overhead line, and you could obviously run flat or a small loss, but the new paradigm, the new way of running a venture-backed business now is have a robust business plan, a robust idea, and a solid team to execute on that, and a good team of investors behind you that effectively have got you back, reassuring that you spend ahead of your revenue curve and you're investing in growth. And companies are going so fast now. I mean, we talk about Revolut and TransferWise being unicorns, and we're almost complacent about that, but these companies are less than 10 years old and they're worth billions of dollars already. I mean, that's unheard of. So you can do that when you've got venture capital, and you have to have a really, really strong grip on your budget and your numbers. You've got to really understand what your revenue forecast is and be very, very honest with yourself and robust with your forecasting. You've got to have a real handle on your overhead, and it's just a new way of doing things. So on the outside, unless you're party to the plan and the budget and the numbers and the infrastructure, it's overwhelming and scary. But actually, we ourselves run at a burn rate, nothing like that. But and my CEO quite often says, you know, we'll probably not be profitable for quite some time. And he's very relaxed about it because we've got great support, we've got great investors behind us, as you have. But as long as you're on top of that and not reckless. I mean, we've all heard stories about Silicon Valley startups having ridiculous expense bills and trashing hotels in Vegas and things on expenses. But you know, you obviously can't go like that. But if you're on top of it, it's a perfectly acceptable business model.
Because I guess the model is like, you know, it's this kind of VC funded, like Uber like model, right? It's like one company is going to hit scale. It's kind of a race to scale. And how do you fund that? Well, it's customer acquisition. How do you fund customer acquisition? You raise a bunch of money, you spend the money, you run a huge loss as you're building that scale. And then like once you kind of own the market and that kind of, you know, critical mass comes through, then the economics change. And that's like kind of the bet that people are taking. And I don't know whether or not Monzo is following that model. I don't know, question mark. I think it sounds like they're now starting to roll out, or at least intending this year to roll out some of the revenue generating products that they haven't yet really launched. So banks traditionally make money by lending their deposits, and I think Monzo to date has kind of focused on building a great user experience around the current account, getting people to use it. But that does, from a bank standpoint, mean effectively balance is sitting on a current account, costs of running those current accounts, but not generating revenue by lending money. So it sounds like an overdraft product is something they'll be developing, or at least pushing out to a greater extent going forward. I mean, okay, so you guys started businesses, you connected with customers, you built out solid tech infrastructure without raising, in Philippe, certainly in your case, massive amounts of money, and certainly without losing massive amounts of money. So,
how much did you raise?
Primary, we have raised 19 million, something like this.
19
euros.
Okay, I thought it was more than that.
Yes, and we have been profitable now since January, so it's a very different approach.
Yeah. Okay. So what was that approach? How did it work?
I will think it depends a lot in, let's say, the market segment in which you are. So in our case, what we try to do from now 3 or 4 years is to develop very different, quite complex technology for businesses to manage FX, which is something that you can hardly grow just by massively marketing and advertising, because it's too B2B, too sophisticated. People will not just buy it because you put some kind of advertising. So it's more B2B complex sales approach and sales cycle. So you can afford to do it in a reasonably lean way. So raising 19 million is not necessarily lean, so at least it's debatable. But I mean, without raising a lot of money. If you are in the neobank market and you are Monzo and you have N26 and Revolut raising a lot of money, and also TransferWise now moving also to this market with their bank account offering, you cannot go lean. So or you play big or you don't play, but you have no choice.
Yeah.
And I think there are market segments like that are really that way.
You can find out who your target audience is and go and talk to them, right? Whereas in the retail environment or consumers, that's really difficult. You can't do that. You have, as you say, you have to spend the money. Yeah. You have to wave flags and hire people and have huge marketing teams. And I mean, TransferWise spent a huge amount of money on their marketing machine, and I think they've scaled right back recently, haven't they? Because they've now reached out kind of organic virality with it.
All right, so Philippe, in your case, you do acknowledge that it's complex technology. To kind of provide the value that you're looking to provide to your customers, you need a more or less, fully built proposition until you can, but before you can actually, when a customer start driving revenue. So in your case, was it raise money, build out the entire system, then go find a customer? Was it build out a kind of single product and bring on a customer and kind of iterate from there? Was it build a bespoke solution on like a consultancy basis for a first customer and grow from there? How'd you go about it?
It has always been very incremental. So we raised some money, we built something which was quite basic. We built something on top, we raised a bit more money, so it was always very incremental. I don't believe too much in the philosophy which consists in raising a lot of money, spending a lot of time building a product, thinking that your product will be a killer, and then going to the market to sell. Because very often this is when you fail, because basically you have not really understood what clients were looking for, or maybe you are then coming too late. I think you can do it when you are really a specialist in a very specific segment and you have already built companies. And I think a very good example is Adyen. The guys that built Adyen, they already built a successful payment gateway. They sold it to WorldPay, if I'm not wrong, and then they spent time building Adyen because they wanted to be something much more sophisticated than what really existed. But they had a huge insights and knowledge about really this very specific segment. If it's the first time you build a company in a new segment, I don't really believe you can spend a lot of time just building products thinking you are so smart that you will by default have the best product. You have to go to the market quickly and incrementally, I would say, develop new thing, new feature, new product, and in the end a range that will potentially answer all the needs of your clients. And the same with no banks. They are just starting with a bank account, quite basic, with a card, very simple, and then they start adding products on top, being insurance, investment product, crypto, anything.
It's also the same if you spend too long building the first iteration of your business in a fast-moving environment, in a fast-moving industry. If you take too long to get to market, then the requirement for the value proposition might change underneath you. I mean, what is that expression? If you're proud of your MVP, you went to market too late. It took too long to launch. And yeah, as Felipe says, you have to iterate, and to an extent, you have to be. It's not easy doing these things in flight whilst the product's in use. It's a lot easier to build something on the workbench. But if you get it perfect on the workbench, it's out of date.
You guys kind of built CurrencyCloud in flight, didn't you?
Yeah, absolutely. Yeah, we like any technology business, we're releasing on a weekly basis.
Yeah. Okay, so, and so so what, like, at what stage was the product when you brought on your first customer?
I look back at the first product that we got to market now, and it just seems a million years ago, and it looked like it was a million years ago as well. But we were servicing a fairly different market back then. When we had the first iteration of our product, we did have a direct-to-market proposition like Philippe. But this is back before we raised a meaningful amount of money. We got the first iteration of our product out on angel investment seed capital, and then
how much?
£400,000.
Wow.
If memory serves me correctly. And then we did our first meaningful fundraise, Series A, and we got Atlas Venture with Fred Destin on the board. We were reluctant. At the time, he was a rock star VC to have on the board. And we had this influx of cash, and all of a sudden we went and hire more developers. We went from 3 developers to 10 in something like 6 months, and it was like, right, now we're rocking. Fast forward to where we are now, and it just seems so quaint in hindsight, because now you have to have armies of people, entirely different infrastructure requirement, and it's difficult.
Yeah.
It's difficult, but you can't do it all. You can't do it, as Philippe. You have to learn about the market, the customer, and indeed your business and your value proposition as you go along. Unless you're absolutely 100% certain of your market, of your model, and what you're doing is going to work, and you know that you found a niche that nobody else is in. Yeah. And that doesn't happen very often.
Well, on the subject, I guess, of kind of like infrastructure businesses, one that actually, for whatever reason, kind of like, popular press or kind of mainstream fintech isn't necessarily all that well known, but that was in the headlines just this week, Saxo Payments Banking Circle, who I think technically rebranded now Banking Circle, having dropped the Saxo Payments part. But Saxo Bank, the Danish bank, was I think one of the kind of the big investors initially that helped them kind of get to scale, and they were effectively acquired this week by a PE fund, I believe. There wasn't tons of information on the deal.
EQT, the big Swedish. Is it Swedish or Danish?
No idea.
They're a big Scandinavian Scandinavian PE firm. Yeah.
So, Steve, you must be familiar with Banking Circle. You guys are in not wholly dissimilar areas of the market.
Yeah, I mean, again, they go to the end customer, but they sell to regulated entities as well. But they're servicing the PSP space, the acquirers, and providing. Effectively providing neo-banking services to a very niche market. They've done a great job in executing on that. If the numbers are taken at face value, it's a huge amount of volume they're processing in a very short space of time.
It's a similar model, I think, to Railsbank. We had Nigel Verdon on the show recently, effectively kind of connecting banks on one end, aggregating them onto a platform, and then offering via API the ability to kind of use bank-like services if you're a fintech. So, issue IBANs to customers, do FX, virtual accounts, things like that. Clearly a need for it.
Yeah, although Nigel's business doesn't handle the funds, whereas Banking Circle is a regulated business that handles the cash and provides FX and payment facilities. So there are differences, but yeah, it's an early transaction for Saxo. I think it was always part of the plan, actually. Saxo Bank was always an incubator, and the Banking Circle was always going to be carved out. Good luck to them. They're obviously doing a great job.
So one of the other topics I wanted to pick up, and we'll see where this goes, because I think you guys have strong views on the subject.
This is going to get interesting, isn't it?
Well, actually, as I understand it, from what we discussed before we started recording, you guys largely consider yourselves experts when it comes to the topic of AI and robotic process automation.
Absolutely. What do you want to know?
Like everyone these days, right? I mean, everyone's an AI expert. So I'd be interested from where you guys sit. So thinking about the kind of B2B space, Philippe, maybe in your case specifically, you're effectively offering some software solutions that take care of some business processes that either traditionally weren't done or were done by humans. So, I mean, that trend will continue. There's no doubt about it. How far do you guys see that going? Maybe specifically, thinking about kind of the mid-cap type business.
I would say there are things that by default are better done by machines than people. So if you're a business and you have a lot of FX exposure and a lot of micro FX transactions, having a machine that's managing all these transactions 24 hours a day, 6 days a week, to make it simple, it's much better to have it managed by your machine than by your people. Because the machine can work during the night. If the market is moving, the machine immediately reacts. The machine is never sick. The machine never on holidays, never in meetings.
And theoretically never makes mistakes.
I would say the machine sometimes may make mistakes, but much less than humans. So for me, it's a no-brainer to have this kind of very process-oriented things, managed by machines and by people. But here we're not speaking about AI. We're speaking just about a machine that execute a process based on the rules you have defined. So AI is a very trendy word, a bit overrated.
I need to get this right. Somebody explained to me AI, and it's artificial intelligence. I think is one of those expressions that is a little bit misleading, and people get a bit excited about it. But somebody explained to me that AI is identifying patterns from a large data set, and then being able to make decisions based on that learning. So it's good in big data environments where if you've got an if this then that scenario, a certain set of logic gates that you need to put a decision-making process through. Speaking of if this then that, did you see the Monzo if this then that integration?
Yeah.
I think that's absolutely brilliant. Just changing the subject slightly, that's absolutely brilliant. That's literally crowdsourcing your development, isn't it? Crowdsourcing your product development, which I thought was really clever. But anyway, that's all I have to say about that. I'm not an AI expert any more than a layman, and
but me too.
Maybe that makes me an expert. But there are so many commentators and industry thought leaders that have all got opinions on things like AI and blockchain. But we were saying earlier, people seem to get excited on the technology and the buzzwords because they're technology and buzzwords.
So what are you guys looking at in fintech right now? What are you excited about in fintech?
My view is that we are going to evolve. There are two things that happen. First, we are going to evolve from a very much UX focused fintech industry, which doesn't mean that everyone is UX focused, but meaning there is a lot of fintech companies, in particular big ones, that in the end are improving the user experience, but on the long run you do not make a difference just with UX, because even retail banks, we have a reasonably good UX at some point. And I think the second thing that will happen we will really come back to a bundling of products. So we had the unbundling moment, let's say, when basically it was many companies focusing on one single thing. I think we'll come back to a bundling trend in which being B2C company or B2B company, but what they will try to do is to start offering a range of product, because in the end, if you want to be relevant, you need to offer a range of product. People cannot have 10 fintech suppliers just to be able to manage their finance. At some point, they need one or two. So we are coming back to the old days when the bank was offering everything. Now it really is a different style in UX, but I think we are really going back to that. And if you think about retail banking, B2C, the final battle will be around mortgages, because in the end, in B2C, 90% of the revenue generated by a bank is by the mortgage. So if neobanks are able to really become relevant in mortgages, they can become relevant as banks. I think that if they are not able to be relevant with mortgages, there will always be a second or third bank, and people will use their cards for some purchases, but they can never become really relevant. But my feeling is that they will find a way to fix the mortgages challenge, let's say.
I agree with that. There's no doubt we're in exciting times. I genuinely think that financial services is been through and is still going through a transformation. Some people call it the fourth industrial revolution, to quote my friend Chris Skinner. Banks have always been the go-to venue for anything related to financial services until about 10, 15 years ago, I guess. I'm not one of these people that believes in beating up the banking environment. I don't think it's constructive. Banks are banks and they are what they are. Historically, in my opinion, whenever you've seen a transformation, a change in the service delivery of a bank, bearing in mind that technology is not the answer, it's an enabler. Business models are what drive things forward, and business model change is what makes a difference. Technology is just an enabler for that. But any changes that the banks historically did would be to drive efficiencies and distribute the cost of servicing the customer back to their customer base. So you move from branch banking to telephone banking to online banking to smartphone-based banking, and now we're in a scenario where banking is actually being interwoven with your day-to-day life. With the when PSD2 was being spoken about, pre-PSD2, so end of 16, beginning of 17, KPMG even wrote a white paper talking about the bank of the future is going to be invisible. There is going to be no brand. Banking transactions are something that just happen in the background. You have the rise of these executive virtual assistants like Alexa and Google Home, and in a world with Monzo connecting to if this then that, you literally could just envisage transactions and banking style events just happening as a result of your day-to-day life. And to an extent, you're kind of doing that with the corporate world. You're integrating FX execution and transaction execution services within ERPs to collapse down a fragmented workflow that the average FD has got, and that's the kind of things that we're getting involved with as well. So it's exciting, and I think open banking is just getting started. PSD2 is just a milestone. I do think you're going to see a lot more integration, a lot more collaboration. I think there'll be further fragmentation, but that necessarily leads to rebundling. Seems counterintuitive, unbundling something to rebundle it, but you'll get the best of breed. I think Chris Skinner talks about banks doing having to do thousands of things okay, whereas fintechs out there are thousands of fintechs doing one thing really, really well, and you could actually pass that thought on to individual products and individual services by individual providers, whether it's a bank or a fintech or whatever. And why should an individual have to choose one supplier or a handful of suppliers? Why can't they pick and choose all of their best, most competitive products from a multitude of providers and just access that through a single interface, whether that be a user interface, a smartphone app, or just by talking into thin air because they're talking to Alexa.
Okay, so, well, Philippe, to pick up on Steve's point, so you guys automate a component of kind of the business workflow, to use Steve's term, but if you kind of extrapolate that to the average person, right? Like, why aren't there more fintechs trying to automate components, whether it be specific components or kind of around a certain kind of area of retail customers' daily interactions? Why aren't we seeing that yet? Everyone talks about how it's the future. You guys have been doing it in the SME space since 2011, you said. So where's it on the retail side?
It's interesting, actually, because normally you have this conversation the other way. Normally you say, well, there's been a huge amount of innovation in the consumer space, but nothing in the corporate space. Why is that? And my answer to that is, well, consumers want rich engagement and interaction and nice, cool-looking smartphone apps and things like that, whereas in the corporate environment, and you'll speak more to this, I'm sure, but in the corporate environment, the requirements are so much more complicated. And generally, a corporate customer is more valuable to a bank or financial services provider, so they tend to look after them. Whereas consumer banking and current accounts, current accounts are generally loss leaders for a high street bank. I'm amazed that my bank makes
they are for Monzo, right?
I'm amazed my bank makes any money out of me. And to the Monzo question, I had one of the pink coral Mondo cards before they had to rebrand. And I used that a handful of times. They went to the cost of getting me onboarded as a customer. I've never used it again, and I didn't convert. So even for someone like Monzo, they can't have made money out of me. No way. It's hard.
I also use one neobank, so I have one of these flashy cards, and it works well, honestly.
And which one? N26?
I will not tell what it is, but one of the big ones. But I'm always amazed when you go to Twitter and you have these people that receive their flashy cards and tweet it and are super excited. Because I always think, okay, nice. You just receive a debit card. You know?
It does seem that
when you go to B2B, believe me, you speak to a finance director, he's not excited because your website is flashy. He's excited because you really bring value. So it's two very different spaces. Meaning in B2C, you can really play on the brand, on the trend, on the colors, on the marketing message, on many of these things. In B2B, you cannot at all. But what Steve said, a B2B client can be extremely profitable and valuable.
But
B2C
also,
clients is very different.
Also, you familiar with crossing the chasm? It's the journey you go on as a technology business, which can be applied to fintech, and you've got a bell curve, distributed bell curve of your customers. And you're talking about the innovators, the early adopters, and as you're going up the bell curve, there is this great big gap called the chasm before you reach the pragmatists or the mainstream adopters, and then you've got the late adopters. And the excitement that we're talking about of people getting really excited and tweeting photographs of their debit card, I mean, if you think about it, that's just lunacy, right? Who gets excited about a bank card, whether it's coral pink or whatever? So are we in a situation where the neobanks are still just selling into the excitable early adopters that are always going to love the latest cool new thing? And do they have to cross that chasm? I don't know. I don't know how many customers Monzo has got now. I know Revolut recently announced that they had 2 million customers, which in itself is not that exciting for a bank, but the rate at which they're acquiring the customers is, because back in November they had 1 million customers and they just announced that they doubled it to 2 million. So they doubled it.
I wonder what qualifies as a customer.
Well, that's another point for discussion. And
I'm going to get this wrong, but I feel like off the top of my head, Monzo's at like 750,000 or something.
Yeah, as you say, what qualifies as a customer? How often do you have to use it? And then do you have to use it as your main account, or do you just use it for certain circumstances?
Yeah. Do you guys know Airwallex at all?
Yes.
A bit. Yes.
Okay.
So they just raised $80 million, and they've been called effectively the TransferWise for SMEs.
I wonder who put that. I wonder who put that expression out there.
So what do you know about him, Steve?
So I know Jack. I've met Jack a couple of times. Jack Zhang. Smart business. They are. It's a wallet product, as you say, for SMEs effectively. Focused on Asia at the moment, competing with the likes of Instagram. They've got some interesting investors, some great investors actually. Sequoia, MasterCard, Tencent, which has got to get anyone's attention. I don't really have visibility of the kind of customers they're servicing at the moment, and I think they're still quite early on their journey despite the size of the round that they've just done. But it strikes me that they've built a product, proven it works, and they've now got their investors to really back them. But they're no doubt well connected. They've no doubt got a great piece of technology. They've no doubt got a great management team. Otherwise, you wouldn't get investors like that putting such a large stake on the table, so to speak.
Yeah. Well, maybe we'll have to connect with him at some point, get him on the podcast. But it's kind of interesting to think that even now in this era, we were talking about globalization, it's like the 90s or something, and yet there's this stark divide between fintech in the US and fintech in Europe and fintech in Asia. Though a lot of these companies are solving problems that are issues in all geographies, but they just don't necessarily scale more broadly. And yeah, okay, there's if you're a bank in the US, then it's not easy to become a bank in whatever Singapore. That's a completely different jurisdiction, regulatory stuff, and whatever. But a lot of these companies, especially those that aren't holding banking licenses, you would think they would kind of scale globally more easily.
That's interesting because you've got three very different markets there. So obviously the US is in theory one country speaking one language and one culture. And obviously you've got Europe with a similar body of people, similar population, different languages, different cultures, but one common regulatory environment. The US regulatory environment is a bit more fragmented, well, a lot more fragmented actually. And then in Asia is a very, very much more distributed ecosystem, a marketplace. Every country, you can't look at Asia as one jurisdiction. It's a series of jurisdictions that are just lumped together. You've got different regulatory environments, different company infrastructure requirements when you're setting up a business out there, different languages, different cultures. Culture is really important in Asia. It's perhaps not so much important in the West, but you really need to take into consideration cultural differences when setting up a business out there.
You guys did you have an Asian office?
Not yet. We're getting started there. We're in the process of applying for Singapore.
Excellent.
Yeah, exciting times.
And you have a US office?
We have an office in New York. We are very close to having a full set of state licenses as well. It's been a challenging process getting there. But yeah, so by the middle of next year we'll have, well, in fact probably before that, by the end of Q1 I imagine actually we'll have a Singapore license as well.
So apart from the licenses, from like an operating model standpoint, from a technology standpoint, from a system, like does anything else change? Or is it just the licensing?
So obviously it gives us the ability to address markets locally, but it also gives us the ability to collect funds in country and build local treasury centres. So at the moment everything goes through London. We're in the process of building our New York treasury centre. But when we have a treasury centre in Singapore as well, which will be our regional headquarters, then we're effectively processing transactions 24 hours a day, and you can really collapse down the in-flight time for processing currency conversions and processing payments in and out. So when you've got that, you can then optimize a transaction on a global basis. So it doesn't necessarily follow that you would just use your Singaporean treasury center for Asian customers. You'd use your treasury center in Singapore for transactions that are going to terminate in the region. So if you've got an American customer wanting to make a payment to Australia, for example, you'd put the transaction on in Singapore. You can optimize that transaction process to really, really streamline, because business like ours, we're measured on the efficiency of the exchange rate and the speed of payment, the speed of settlement. Philippe's got slightly different KPIs and metrics and the eyes of the customers, I guess. But for us, it's all about moving money quickly.
Yeah. And I guess do the rails change then when you've got the treasury
absolutely.
hub in New York?
We add a whole bunch of optionality with that. Adding corridors, adding currency coverage, adding local payout corridors, local collection corridors.
So is it mostly like kind of Swift process at this point?
So
and you'll be switching to local processing?
We do a lot of wire payments, the same as everyone does, depending on the nature of the underlying transaction and the urgency for it. But one of the big things that we have built out and will continue to expand, and the Asian expansion will help with this enormously, is we want to make use of local networks wherever possible, because it's a lot more efficient, it's cheaper, there's no opacity in the charging structure, there's no correspondent fees or deductions along the way, you're not going to have beneficiaries calling you with a short delivery. So we have an ambition of connecting local clearing schemes with one another using our technology. So that's a different take on moving money around the world.
Love it.
Yeah, it's good.
Guys, where can people connect with you and find out more about your companies?
LinkedIn, Twitter.
Absolutely.
As anyone. No innovation here.
No, absolutely. I'm all over LinkedIn. Twitter less so. I've kind of fallen out of love with Twitter. Or email me. It's an old-fashioned notion, isn't it? Steve@CurrencyCloud.com.
Traditional. Excellent. Guys, Steve Lemon of CurrencyCloud and Philippe Gelis of Kantox, thank you very much for joining us today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.